Your personal trader's statistics and trader's math, or the trader's equation. This is a big one. This is something that is making sure that your trading over whatever period of time you're looking is good. In a sense, you have a positive expectancy. You're not risking way too much to make too little. You're not making, really, really tiny gains for way too huge losses, or your wins are really huge, but you take too many losses. This is what really shines a spotlight on your trading from an analytical or a statistical standpoint. These are the hard numbers. There's no getting away from these facts, right? Now, each charting platform will have different ways to display this. You might even have to do it manually in Excel, and that might even be a better way so you can track your commissions and all of the other stuff. But this is just one built into NinjaTrader, and I'm just using from today because, well, I don't know how the trader's math is going to work out today because I haven't even done it yet. So this is going to be a new one for me too. Hopefully it turns out well. But we've got a span of time. In this case, I've got a span of 30 trades. So with 30 trades, it's not really that, it's not a ton. It's not like 100, but it's a good amount of trades to at least give us an idea of what's going on. So we've got the 30. That should be enough. I mean, generally you'd want maybe a week's worth of data, but whatever. What we're looking at is the average and the average wins, the average losses, what our numbers are. And we want to figure out what our trader's math is by utilizing those. So first up, we have to figure out what our average wins are and what our winning percentage and all of that is. We can see right here on all trades, in this case, over this time span on the first, it was a 73.33% accuracy. So if we take that minus 100, our losing percentage, 26.67. Pretty straightforward math, I know, but just doing it so we're all on the same page. Those two numbers are our average profitable and our average loss, basically, right? That's how many times we're right and how many times we're wrong. So assuming this is out of 100, even though it's only out of 30, but assuming out of it's 100, just to make math easier, we can look at this with that in mind saying, okay, well, I'm right 73.33% of the time. So we can take that 73.33 and I want to take this times my average winning trade, not my largest winning trade or anything like that, my average winning trade. And that's going to kind of find that mean in the middle to give you something to work with. In this case, over this span of time, it's 27. Now, we want to do the same thing for the losses. We know the losses are 26.67. So if we take that times our average losing trade of negative 18, so times negative 18, times... Okay, fine. I'll just do 18. And then we can take our winners minus our losers. So 1979.91 minus 480.06. That is the expectancy. As long as this number is positive, you're good to go, right? That means that you're trading in a relatively appropriate way. Your risk isn't too large for your wins are doing better than your losses, or if your average accuracy is lower, right? If you're under 50% profitable, 60% profitable, something like that, your wins are large enough to overcome the times that you're wrong. You need a positive number here. If the number's negative, that could just mean that you had a bad day, right? That's why you need to ensure that you have enough days of data here, so you're not just knocking out, a crazy, one crazy day that just caught you off guard. Everybody's going to have a bad day, but you want to calculate over a span of time, how's my math? Even on a bad day, how is my math if I'm able to use the tools? Sometimes if all you had were losses, well, you can't really do anything that day in terms of figuring out the math. There's no wins to calculate. So here is kind of the same concept. Again, I didn't do the math on this, so I hope it works out well. But this is where you can really spotlight what's going on. This is over a period of a month from 2-1 to 3-1. And this will give us enough to really base our numbers off of. So you got a total of 1,044 trades. That's a lot better than 100. That's pretty good. So we don't really even have to do the math here because it's already kind of done for us. But if we take our average accuracy, 71.26, minus our losses, 28.74. So 71.26 times our average winning trade of 25. Then we can take our losers, which would be 28.74, times our average loss, which is, oops, no, I almost did that again, times 44, and that's 1264.56. So if we take that number, 1781.5 minus 1264.56, it's a positive expectancy. Although it's not a very high expectancy. If it starts dipping below 500, that's generally where I might want to start retooling things a little bit and adjusting things. It's usually more than just a market anomaly if it starts getting a little bit too low, especially over this many trades, right? This isn't 100, this is 1,000. We've got way more than enough. So this number, what I am looking to do in this case, now that we've done the analysis on mine, I need to work on trying to either, A, first off, getting this number better by doing one of two things: increasing my accuracy or increasing the size of my winners. Those are the only two things that are really going to help me in terms of increasing this number. It's still a positive number. There's nothing wrong with that, but the goal, as every trader, is to get this number as high as possible. But this is how you figure out your trader's math. What's your equation? How are you doing as far as that equation goes? Some days are better, some days are worse. So take a span of time. Do over the course of a week. Do over the course of a month. Really shine a spotlight on how things are going, and you'd be surprised what you can learn about it. It's very interesting stuff. All right, well, that's going to do it for this one. Hopefully you found it useful, interesting, and entertaining. Something you can add to your tool belt if you haven't been doing or factoring your trader's math. It's very important to do and something to always be keeping an eye on. So make sure you're always keeping an eye on it. Like I said, sometimes that spotlight doesn't always show you the funnest of things, but it gives you a really good opportunity on where you need to improve and the things that you're doing really well. So that's going to do it. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, we'll talk to y'all then. Thanks.